Hey, Renter Retires, this is Adam Schrader here again, and we are once again going over some of the live stream that Zach and I had from BiggerPockets' Instagram when they allowed us to take over. We just listened to the last one previously, so this time we want to get you to part 2 of our live stream takeover of their Instagram account.
Let's talk about just evaluation of the markets as well as Mr. John Doe starts to explore some of these markets more, Adam. Like, what are some important things? We've talked about what we look at in a market, but like, what are some concrete things you really need to dive into to start understanding a market? I mean, would you suggest that someone needs to fly out there and drive the streets? Who are the right people to connect with? Let's go through some bullet points of concrete information on evaluating a market.
Yeah. So it depends what kind of investing you're doing. Like, for example, if you're going to go out there and do a flip, for example, you 100% should go out there, in my opinion. I mean, if you're going to be out there swinging a hammer and leaving your tools in places, you want to know exactly, what that property looks like and everything. But in my opinion, step one is just call some property managers and just, talk to them about, where they have seen value. You can call some realtors if you want and ask about areas. You can, the BiggerPockets forum has people talking about markets all the time, and so you can get some ideas from there. I personally have never visited any of the markets that I currently own properties in. Never seen any of them. You just do your due diligence from afar, and things have worked out. Things are working out for the hundreds of people that we've helped. But it's really just calling the local people, because they're the ones who are going to be able to tell you. I mean, you could go to any market any day, drive down a street, it might look great, and then later on you find out, oh, it's surrounded by these places you don't want to be. So you may as well just call all the local people that you can and get an idea of what's there and where you want to be and where you really don't want to be.
Yeah, here's my opinion. We buy at this point, we buy a lot of stuff, even locally, that we've never seen, and that's okay. But we do obviously have a methodology to follow on evaluating those deals, right? And we have a whole team of the right professionals, which is really what we're talking about today: how to build your team to be a successful investor long term. And if you have a system to follow, you can apply that system to any market. I don't think it's necessary to fly out to these areas, but don't start on Zillow either. You got to go a lot more granular, right? One resource that's on this list is that I think is probably one of the best is Neighborhoodscoutcom. And this is a resource. It's a paid subscription, but you can also have a free subscription where you can actually get very granular. You got to compare it to Google Maps, but you can actually see sometimes block by block how a market is performing, like what are metrics. When you're looking at things like school districts, for example, you can't just look at a Zillow school rating. There's a lot more that goes into it. A lot of times in the Midwest and in Southeast, maybe the public school system in that sector isn't that great, but there's a ton of great private schools. And so those are things that you need to really look at to evaluate, like what sort of things are attracting people to move here. Look, we like to be in the path of progress. So areas where we're having transportation to these areas. A lot of times we'll have people that are giving us reports that attend city planning meetings, what new jobs are coming into these areas, right? Census data shows you a lot, just government census data. I think that's a great resource. Things to look at that I think are important, especially right now in 2023, secondary and tertiary markets. What we think about when we talk about secondary and tertiary markets, areas if you're looking at a large metropolitan area that's very expensive, there's a lot of sleeper markets that are within 20 to 30 minutes commutable drive, or even maybe within an hour, that are blowing up, but they are a fraction of the cost. And so your rent to price ratios are way better in those areas. Those are a lot of areas that we focus on. For example, Cleveland area, still a lot of great opportunity within 30 minutes. Akron, Barberton, which is showing up a lot in the news lately for positive things, are some great markets to invest in, right? Polk County outside of Orlando. Orlando is crazy expensive, but if you look at areas that are within 30 to 45 minutes, like Polk County with Southwest, kind of in between that interstate corridor between Tampa and Orlando, it's filling in dramatically. Ton of opportunity there, and you can acquire property at 20% of the cost of Orlando, right? And that's an area that we're seeing like 20% rental increases year after year, and they're always rented. So we look at some of those secondary and tertiary markets. Also understand how markets change, right? And then market trends. You need to understand data to really look and understand what is a future looking like for that market. Are there areas that, I mean, the state, for example, the state of Ohio as a whole is losing population, but within the state, there's a lot of people repositioning on where they're moving. Because of COVID, a lot of people are working from home. Do they even need to live in a tech city or something like this, right? There's a lot of people moving down to Florida and Texas right now because they're able to work remotely in their job in, Silicon Valley or something like this. So those are a lot of things to understand, I think, as areas go on. But
They also, when it comes to population, remember, if an area can hold their population flat in today's market, you're in line with the USA. I mean, the USA growth is like 0.1%. So
I love it. Let's talk about, for John Doe, he's decided on, say, Kansas City, Missouri. Okay, so he's going to invest there based on his price point. He's okay with, good chance of appreciation, but he's mainly cash flow investor, and he's trying to stretch his capital as 50K to like two properties, okay, in a decent area. So he's decided on Kansas City. What is the next step, in your opinion, for him, Adam? How is he going to source the right people, the right team? Does he call a real estate agent or a broker? And how does he know, does he start calling property managers? How does he know that he's talking to the right people that are truly going to help him as an investor? What do you think?
yeah, I mean, property managers are a solid place to start. And they're also, I mean, I get a lot of investors asking me, how am I going to sell my property? Remember, property managers deal with investors all the time. So they have, their own real estate agents that they can connect you with who will tell you where investors are buying, where investors are selling. They'll tell you the neighborhoods that you should and shouldn't do. And so, I mean, you don't have to obviously sign up with each and every one of them, but calling property managers, they have a ton of resources set up because their whole business is centered around investors. I mean, they wouldn't be in existence if it weren't for investors. So they've built out a system where they can help investors. So I think anything locally that you're investigating has to include a property manager.
Yeah, this is the way that I would approach it. So I would call all these people, right? And this is more time on the phone, just like we talked about with calling multiple lenders. You got to source somebody. Obviously, with the turnkey investing, that's like you tap into an immediate team, right? So it's easy to just tap into a team that has established teams. But also, maybe you can leverage those. For example, a rent-to-retirement. If you don't invest with us, we're still happy to share our resources with you, right? If you're going to go out and do it on your own. So people that are basically the people that are familiar with those markets and are, investors themselves, that's the key number one question I always ask people. If you're calling agents and brokers, how many properties do you own, right? Are you an investor yourself? If the answer is 0, or I'm thinking about investing, or I help a lot of investors, to me, that's an easy no, right? I want to know that they are personally an investor in that market so they can, when I'm talking about evaluation of properties and things I'm looking for, they're going to know. And I've always been super successful by adding people to my team who are on the same path as me, right? People that are constantly investing. And the same thing goes with property managers. So that's a good resource. I mean, start calling people, tell them what you're looking for, and also listen to their feedback. A lot of times, I think we're unrealistic with our criteria. I can't hear, Adam, I mean, I don't know how many times I hear that, oh, well, I want a 15% cash on cash return on a $100,000 property, and I want to put, no money down on it, right? Or it's like
neighborhood,
right? So there's some give and take. You got to take this feedback too. If you're stepping outside of your comfort zone and investing out of state, you got to understand what, is that realistic? Are your goals even realistic? And if they're not, you need to go back to the drawing board, but take some of this feedback. And BiggerPockets is obviously a great resource. There's a ton of people on there, right? If you Google Casey or whatever, you're going to get 1,000 agents that jump on threads and say they're willing to help you. But I would start with that question. How many properties do you own?
Yeah, and especially, I mean, whenever you look at neighborhoods in general, and this is what a lot of people tend to get worried about that I think they don't need to get worried about, is owning a rental property. You hear like C neighborhood. That's not necessarily a bad thing. I mean, most of your renters are in your C to B minus neighborhoods. I mean, that's where the majority of your rental pool is. And so owning in those areas is absolutely fine. You just have to make sure that you're not getting into the, D neighborhoods and below. I mean, you can obviously make money down there, but that's not where I like to operate personally. So there are neighborhood classes that get a bad rep that don't need it, in my opinion.
Yeah, the best thing you could do is find the right people, and actually, yes, do go visit if you can. I mean, if it's your first time buying, I mean, it's good to have some hands-on, to meet those people, to sit down, to understand how, the market works and, driving the neighborhoods. I think that's very important. So as you become a more successful investor, maybe not 100% necessary to visit, but it's a good thing to do. One thing I forgot to mention earlier is that one of the major statistics that we look at in evaluating a neighborhood class is the tenant to homeowner occupancy percentage. If you're in an A-class area, you're likely going to have a large percentage of homeowners, 90% plus. If you're in the B area, like we like to operate in like the lower A to upper C, kind of that B-class area as a mid-grade, where you get the best bang for a quality neighborhood, maybe even an up-and-coming neighborhood that is going through a lot of revitalization, where you can have some appreciation, but you're attracting a quality tenant. And generally speaking, in a lot of those areas, we see about a 50% tenant to homeowner occupancy percentage. So this is one stat that I would look at. So I know we were getting sidetracked on a lot of stuff, and for everyone like if you want to go to rentretirement.com, we put out a lot of these type of videos as well on education on a regular. I would love to come back on the BiggerPockets Instagram and continue like a mini series of this. I see that question a lot. But for now, we're just going to keep going until we get through all this stuff. I think Adam has 7 kids at home, so he's got to attend to them at some point.
It's only 4. They're nice and quiet. They're all home, and you can't even hear them.
Okay, so let's fast forward a little bit for John Doe. He's found a property that he wants to put an offer on. He's working with a local agent that he's vetted as being an investor and has given him some very valuable knowledge. He hasn't found good property management yet, but let's talk just a little bit about putting a property under contract and where we're at in the market cycle, Adam. So how would you recommend someone making an offer out of state? They're working with an agent, they're working with a broker, so they're not directly talking to the seller. But what's your thoughts on making this is an MLS listed property? How would you recommend he approaches it? Are you putting in a lowball offer? He's obviously using financing. What do you think?
I don't know if I'd go lowball, because you don't want to. This is one of the things we talk about a lot is real estate can be a win for everybody. So really you have to see, what does the seller need? How long has it been on market? How long are other homes sitting on market? Maybe it's been on the market for 45 days, but if everything else is out for 45 days, then they may not be freaking out. So you need to find their reason for selling. And if their reason for selling is something where you can offer them less, go ahead and offer them less. But when you run it, just run your numbers, see if it makes sense, find out how much you think you're going to need to put into it to make it the status that you want it to be as a rental. Because I'm a big fan of, get a good deal, but I don't feel like a good deal has to involve screwing the seller and offering $50,000 less and saying take it or leave it. And you can if you want, but if 50,000 less is, if it's a fair price, then it's a fair price. But I'm a big fan of paying what the market says you should pay and what you're going to have to all those. So I don't think you need to lowball, but I think in today's market, in a lot of places, you can go maybe a little bit below list. But I also recently sold a home for $5,000 over list that I asked for on the MLS. So
it's important to understand the market and the market cycle, right? And what we're talking about today is buy and hold rental real estate to build a sustainable cash flowing portfolio long term. We're not talking distressed deals, right? We're not talking buying a property from someone who's going to be foreclosed on or is behind on taxes, or a property that's dilapidated that the city's about to condemn. These are not BRRRR deals. Is there value add opportunity potential? You can get value add opportunities off the MLS. There's a lot of great deals just listed on the MLS, but we're talking about property that is, just a rental property that meets your cash flow numbers long term, whether it's on or off market. And the point that Adam's making is right now, the market is still very strong. Even though buyer activity and investor activity has slowed down, it is still considered a seller's market right now. And that's mainly because of supply and demand. Now, has that slowed and it's geographically dependent? Absolutely. But I can tell you in most cases, if there's a good quality property in a nice area that's cash flowing well, you're not the only investor looking at it. And I think your strongest case coming into a property like that is just being able to build confidence with the seller that you're going to close on the property. So generally speaking, probably John Doe in his KC property has the best chance of just offering list price and having that lender pre-approval ready to go. You can try to negotiate with the seller, but a little key piece of advice for everyone, the best time to negotiate with a deal is after you already have it under contract. right, as you're going through due diligence. Now, you got to also depend on who your seller is, because they may say, no, I'm not going to go for that. It doesn't hurt to ask. But after you go through inspections and appraisals and things like this, that may open up the opportunity for a little bit of negotiation where you get a little bit more leverage with the seller. If you come out of the gates too strong, you may not be able to put that property under contract. So let's talk about due diligence, Adam. When I define due diligence, because people throw that term out a lot, and I look at it as, my definition is, after you have a property under contract, you're going through the concrete steps of appraisal, inspection. You're looking at the title work to make sure you have a free and clear title, and that's how I define due diligence. When you're buying out of state, how would you recommend that someone finds the right people, right? I mean, you don't choose the appraiser because the lender is going to choose them. How do you find a good property? Let's start there. How do you find a good property inspector for buying a property out of state?
Step one that I do for every single market, and we've discussed this before on the rent-to-retirement stuff, but step one, in my opinion, is look for the licensed people. I mean, you can Google home inspectors and see who comes highly rated and all this, that, and the other. But in my opinion, step one is, there's a national database for home inspectors by state, and you can sort it down by city and by even suburb if you want. But finding someone who's taken the time to actively, get licensed in it is probably someone who takes it seriously, which is probably someone you want to talk with. I like to have people who are licensed, but have maybe only had their license in the 5 to 10 year range, because then they're usually more familiar with technology. No offense to the people who've been home inspectors for 30 years, because I like to have my people technologically advanced. Whenever I talk with my home inspectors, step one is I always see how current I think they are. I want to know, what am I going to see on my report before I ever see the report? Like, are you going to get me a walkthrough video? Is this going to come online? Like, is it going to come in a portal where I'm going to have pictures and everything described? I mean, I've seen inspection reports that are literally just handwritten, no pictures added. I mean, that's a waste of time and money. So finding them through somebody who's taken the time to get accredited, who's then taken the time to stay up to date on technology, is going to be crucial.
Make sure they're licensed, 100%. You'd be surprised how many people have businesses out there that aren't licensed and insured. Because here's the thing with property inspectors. If there's a material defect on the house that the property inspector misses, like foundation, for example, and I'm telling you this because I've been through this, but if they miss that and it comes back to be a huge issue financially for you, you will likely make an insurance claim on the inspector's insurance, right? And pursue that, because that's why they have insurance for those things. That's also why you get an inspection report that says, seek a foundation specialist and, seek a roof contractor and all these CYA. But the reality is, if they just miss it, it's important that you know that, and you have that to protect you as the investor. That's why you're hiring a licensed person that's insured. So make sure they're licensed, make sure they're insured. It's not inappropriate to ask for an insurance policy up front. And see who they are insurance, because there's licensed people that are not insured as well, right? So the other thing is, as far as finding a good property inspector, I also like to ask about, how many rental properties in this area do you inspect? Are you familiar with this area? Because I want them to tell me more than just about the property. I want them to tell me about the location. I want to get these little data points from everybody, right, that's walking through that property. I want them to be familiar as an investor. They don't necessarily need to be an investor in this case. I want them to be familiar with investment properties so they can point out to me, who's not going to live in the house and potentially ever see it, what type of things am I going to need to really evaluate from a safety and tenant perspective in this. And so I ask them those questions, and also ask for recommendations. Investors in the area, I found the best property inspector recommendations from simply asking for recommendations. If we have inspectors in an area that we consistently use, and we work across 11 different markets in Midwest and Southeast, we're happy to share those resources with you. So please reach out.
Yeah. So they also, you also want to ask about their reinspection fee to know how much it's going to cost for them to go out, because let's be honest, every single inspection is going to have things that need to be fixed, need to be dealt with. And if the seller goes out and gets it repaired, you want to know how much it's going to cost you to get them to go back out and do it again. And then in what you were talking about with the inspector, you should always have a phone call with them after the inspection, because obviously they're going to write stuff down, but they can also talk to you about what they saw and be like, look, this may look like a big thing in the inspection, but in reality it's not, or maybe this doesn't look like a big thing in the inspection, but you really, really need to have this dealt with. Or, you know what, this house was great, but 2 doors down, there's 8 cars out on the yard, and the house is falling apart, and there's other homes around the area that look bad maybe. And so they'll give you a lot of insight on the neighborhood itself if you just call them. Just call them and had a 10-minute conversation with them. It'll do wonders for you.
That's great advice. Some maybe they would even be willing to do a video walkthrough for you, right?
Mm-hmm.
I mean, maybe they do a
Always.
video walkthrough. And reinspection is huge, guys, because this is a negotiation point with your seller. Potentially, if there's big things that come up, either they go in and they fix it, and then you need to verify it, right? And how do you verify that? You send the inspector back out to re-verify. You don't take the seller's word for it. Or you potentially use it as someone to, some way to reduce the cost, like closing cost credits, or paying for, you're limited as a seller to 2% the sales price of what the seller can contribute towards the property. So that is something just to be aware of. You can't ask for too much, and the seller may not be willing to do that, but that's where a good property inspector comes into play. So,
now, this is assuming that 2% is assuming you're buying it strictly as an investment and not as like a house hack or something like that. People, if you're doing it as a house hack and buying it as an owner-occ in some form or fashion, there is no limit.
good point, Adam. Yeah, you get a VA loan in there, and they're going to have their own inspection. That's sellers, are not too favorable working with VA lenders or FHA. But all right, let's continue to move on. Clear title. You have to make sure that you have clear title on the property, and that's going to be up to making sure that the title company is transferring title for you. That's why you pay for a title insurance policy. That's also why your lender is going to require a title insurance policy, which is a little bit redundant, but we won't go down that road today. But just making sure you have free and clear title without any liens, encumbrances, whatever the case is really important. And getting your title insurance policy prior to closing. Adam, anything else on clear title before we talk about insurance? Or
no, I think it's good.
All right, last thing you need before, say, Mr. John Doe closes his Kansas City property is making sure that he has proper insurance in place. And guys, we could spend a whole hour talking about insurance. You need to have it. It's required by the lender, but this is something you also need to make sure that you're looking at your insurance policy. More than likely, it's not going to be your State Farm, your local insurance that USAA or who I use for a lot of things, but not property insurance, because there's specific companies that will insure rental properties. That's their main insurance, and they'll have good policies in place. They'll likely insure you across multiple markets and have favorable policies. We do have some insurance recommendations for you. Some of these companies are well known on BP, some are not. So NREIG is one, Ross Diversified, Shelter Insurance is a good one. Those are all listed in our resource link that we'll continue to post on the thread, so you can feel free to look at that and see those resources. But one piece of advice I would have for property insurance: also get multiple quotes. Right, you're starting to see that investing out of state, or in general, because a lot of the stuff applies to real estate, it takes more phone calls than just one, right, to the one insurance company. This will serve you well if you get at least 3 separate quotes, and then you compare and contrast those. An insurance company is meant to sell you on a product. They're selling you an insurance product. It's important to look at that insurance product and then also determine what do you need and what do you don't need. Every single insurance policy I have, I always, I'm reducing things, maybe sometimes increasing or adding things like theft and vandalism. That is a huge thing that we always do, and has served us well investing out of state if the company offers that. But there's a lot of things that we'll remove that are just not necessary, and will reduce our premiums much lower. And then eventually, you can have a policy that's like a blanket policy across everything, but at least initially the lender's going to require you to individually insure your properties. What do you think, Adam?
Yeah, and I want to touch on, I know we're not going to dive down the hour-long rabbit hole, but we do have a podcast on our website you can find with an insurance agent where we talk about everything that's involved. But the biggest thing, which is why a lot of the State Farm, Allstate, Farmers, all of those people don't really work, is there's actual value and replacement value. And every single insurance company is going to give you replacement value first, because they're thinking of this like your primary residence, that if it burns down, you're going to rebuild. Well, if your investment property for some reason burns down, you're not going to rebuild. You're going to take the insurance money, sell the lot, and move on to the next property. So, just know that cash value will drop your rate a lot. Not every insurance company does that, though. So just know that going in, that you might get quotes and say, hey, I want cash value, and they might say, yeah, we don't do that. Well, move on to the next company.
Yeah, it's all about getting multiple quotes and comparing and contrasting. So excellent. So John has decided to go with one of these insurance providers where he's able to negotiate his premium well below what the national average is, which is good. That's because it allows him to cash flow more.
Really appreciate the time you spent educating yourself with us today. Don't forget, if you want a copy of the top 20 markets to invest in 2023, you can email podcasts@renttoretirement.com. We'll get that sent out to you as soon as possible. That's podcasts@renttoretirement.com. Also, leave us a review on whatever platform you listen to our podcast on. Send it over our way. To take a screenshot and send it over to podcasts@renttoretirement.com. And we will get that gift card sent out to you, as well as enter you in a raffle for a $500 closing cost credit that we will be drawing at the end of June 2023. Really appreciate the time you spent to educate yourself. Talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.